Okay, the clock's about to tick over. I am on air and showing screen. I have started recording. I have not muted myself and I'm sharing my screen. Hopefully I have it right this time. If you are there and you can hear me, I'd love it if you would just type in a yes. And okay, let's make a start. This is Andrew Peters in Sydney, Australia, with the webinar series on developing profitable Forex strategies. A webinar series sponsored and made possible by the Donna Forex team. And what we're doing is we're looking at developing strategies and using the AutoTrader tool to enable the testing and optimization of strategies that we have learned about or that we want to try out. Let's move on. This is a financial activity, or Forex trading is a financial activity. It does carry high risk, and so we need to be careful in what we do. And I'm sure you've read all these warnings before. The main point is that we take responsibility for our own actions in trading, and then we can enjoy the benefits thereof. Okay, the concept for this webinar series is that we take a strategy and we spend some time to understand the logic, because it's all very well to follow a series of advice about using indicator X, Y, and Z and entering under A, B, or C. But we need to understand why that's being done and see that on the chart as to whether that actually does make sense. When we've done that, and again to make the point that that's nothing special, you can go to lots of webinars where you learn about that. But what we can do in this webinar is that for a lot of the strategies, we can take those entry conditions and we can test them on autopilot rather than spending hours on end trading manually and seeing how that particular strategy performs. So by having an auto trader, we can enter trade settings, and then with the help of strategy tester, we can do various back tests and optimizations. The testing and optimization in some ways appears to be very simple, but I guess we all know that even if you get a back test done well, it's no guarantee for future results. Excuse me. And so there is a lot to properly analyzing and optimizing, and I'll come to that. Particularly, we're going to focus on that tonight, rather than try to get we will try to get the best settings, but there's a lot of learning that can be done when we can't achieve what we want to. And that's part of the discipline that we need to go through in order to become a profitable trader. Having done that, and if we can develop settings that are robust and that can prove themselves at least over 3 years, but preferably 5 years, then we can have that strategy. We can either trade it manually or we can trade it with the auto trader if we have that auto trader. And also towards the end, I'll show you a special offer for the last, this being the last week, where you can get the auto trader and a very specialized trade manager for free when you buy the auto trader. So a quick recap of what we've done. I don't want to belabor the point, but we've done a trend confirmation strategies using MAs and MACD. We've done a pullback for a trend continuation strategy using RSI. Last week we finished our automating our bearish and bullish divergence or a trend reversal type strategies. The week before we did a trend line break, also a trend reversal type strategies, where we simulated a trend line with a smooth moving average. We showed you a weekend gap trade, and the last week we went into a strategy that's available on the net called Forex Power Pro by Russ Horn, and we got as far as automating that, and then we're just starting to see how that it would actually play out when we did the back test. So let's take it on from there, and to do that we need to go to our back tester. And I'm just checking that I've ticked all the boxes, that I'm on air and showing screen, and that I've got my microphone on, and that I am recording. Apologies for having to re-emphasize that, but last week I recorded things 4 times until I got it right. Okay, I'm just going to minimize my GoToWebinar screen. Excuse me. Now what we finished up with was a strategy where we had a slow moving average of 20, exponential. We had applied it to the median price rather than the close or the open or the high. And as we explained before, we did that because we based it on the strategy in the book. And again, for those who missed last week, let me quickly show that. This was the Forex Power Pro, the website, rapidresultsmethod.com, where you can download the Forex Power Pro PDF. And this was the PDF that you can download. And as you see, it uses the 20 EMA of the highs and the lows and the 10 EMAs of the highs and the lows. And what we did in order to make it easier, we used the median and then added a pip crossover distance in order to simulate having a moving average on the one hand based on the highs of a candle and on the other hand based on the lows of the candle. So that booklet is available, and you're welcome to download it. Russ explains it in quite nice detail. Excuse me. So that's how we got that moving average. And then what was used as method is a trailing stop, which is a 10-period exponential moving average. Again, there's normally 2, one for the buys and one for the sells. And what we've done is we've taken the median so that it sits between. And let me just show you what I mean by that. If I take my green one there, if I were to add a moving average, of 10, and take it to the close, we would get a line, and I should make this one. Let's make that a solid line. And if we took another median, another 10-period moving average, exponential, but we applied it to the open, one should be applied to the low. And this fella that I did at the start should have been applied to the high. And as you see, the dotted line that we've established is virtually in between the 2 high and low lines, and the distance there is roughly 10 pips. And so instead of, let me take these away now. So instead of saying that when the price, which is the red line, it's a moving average of 1 is price, when it breaks over the 10-period moving average here, what we're saying is because we've taken the middle line, that distance at the close must be at least 10 pips, which it is there. And if it wasn't, then it would have closed out at the next candle, because that was at least 10 pips. So that makes it quite simple, and it avoids us having to have 2 charts, one doing buys and one doing sells. But now comes the question. So we've set all that up, and we also have RSI, and RSI must be above 55 in order for it to be for a buy, and below 45 for it to be a sell. So we've got the moving average crossover, so the entry condition would be here, where price has broken at least 10 pips above the green line. It's 14 pips there. RSI is above 55, so the EA would have entered a buy trade at this point here, and all going well, it would have exited on a trading stop at that point here, unless it had hit a take profit target. But the distance from there is 230. This is a 4-digit broker, so it's a 200 pip run there, and this particular one would have stopped out at 167. Notice there's some quite sharp drops down, so you wouldn't want a very tight trailing stop. And if you'd had the trailing stop based whenever price broke it, you would have gotten out here. But if you waited for the close of the bar, which is often a sensible thing to do, you wouldn't be closed out until this point up here where my cursor is now. So that looks very good, and what you can do, you can go visually forward and see how this trade should work out. There should be an entry at this point here, and it looks we would have been stopped out at this point here with a trailing stop. Otherwise we would have gone on to here about 100 pips, and then it starts drifting up. So but here we have a case probably where you might get in here. I think that's about 10 pips. Yep. But as you see, that would have been a failed trade and we would have been stopped out. So the question now is, having been given a strategy like this, and we can certainly put on the chart and look at it, how do we know how profitable it's going to be over the long term, say over the next year if we wanted to trade it? And that's where being able to automate this makes it so much easier for us to do that. And so we've now entered, I'm in my strategy tester, which you should all be familiar with, expert properties. If I load, and I've set this in my Donna Forex webinars, this is the Forex Power Pro, and those are the settings. Now, Ross Horn suggests we should have a 1:1 take profit to stop loss. So it started, so I'm just doing a 60-60. That's our initial, and the rest of it, and for those of you who've seen this before, we go all the way to this particular module. I've got it, MA entry is true, the crossover pips entry I talk about is 10, and I've got my period 1 and my period 20, the median price. And for the exit at a trading stop, I've got my settings done here. So we've got all that set, and the question now is, how well will this run? Well, we're told by people who know what they're doing, and from vast experience, that a backtest is not much good. You can do a backtest for 3 months and you can get very excited, but generally we need somewhere between 3 and 5 years of backtest results to see whether the strategy is robust enough to operate under different market conditions. So for starters, I'm going to go from January 2012 till end of June 2015. That's 40 months. It's the euro US dollar. I'm going to do every tick. Up here, this is trading on the hour. I'm going to use a spread of 2. And let's just see what happens if we run this strategy as is. And so we found the strategy. Now we've automated it. So how will it go? And we can set up our graph and we can watch it. Now it should take a few minutes. And while that's going on, let's just recap. Because we're going to have to see what sort of things we might decide to optimize if this strategy doesn't give us the immediate results that we want. And as you can see already, we started up here with about $10,000 and we're currently down to about 7,600. So far it's not looking all that flash. One of the things you can look at, the strategy talks about entering when RSI is above 55, and that's fine, but obviously there can be times when RSI is very high. This one is up to 92, And so one of the things we might do is to set an upper limit for our RSI where we don't want to get in higher than that, because often that means that you're getting into the trend rather late. I say often because not always. Sometimes when RSI goes up, it'll stay up and we have a nice long trend. But that's something we can do. We can obviously optimize about these two levels, although the notion that RSI between 45 and 55, in other words around 50 plus or minus 5, is sort of a dead zone when the market doesn't quite know what it's doing, and it's often better not to trade when RSI is in that type of zone. So we can certainly see while it's here, things are pretty flat. So that could be something worthwhile, but again, if we wanted to, we could test it. Now, obviously, we could test the main entry. We could make that a 30 and see what sort of difference that makes. So as we can see, all of these things, there are a lot of options that we can test and that we need to test. And for any notion that we can optimize a strategy and make it robust in an hour or so is pure fancy. It does take a fair bit of time to get a strategy to work over a long period. So it's easy to make it work over a short period, but then we'll find, much to our dismay, that we'll end up with losing most of our capital. And so we finished a 40 months back test. We started top left, then we finished bottom right. So obviously, as is, we've lost $5,169. Drawdown was 55% where we are now, and we won about 35% of our trades were correct. We made 930 trades. So not an auspicious start, but as we said last week, that's not being critical, it's just factual, and obviously we're using a particular setting for take profit and stop loss, whereas if we're trading manually, we would base the stop loss on the previous lower high, and then we would take a take profit target of about 1 or 2 times that particular stop loss. So arbitrarily choosing something like this is a little bit difficult, or it's not a true representation of the strategy that was presented to us. So let's take us, I'm going to leave it there. Now, optimizing over 40 months takes a long time, which we don't have time for in this sort of webinar. So what I'm going to do is to optimize it for take profit and stop loss for starters. And let's make that, cut that down a bit, having done a bit of work before, and also to avoid too much time. Let's take that. So we'll optimize between 80 in steps of 20 to 140 for take profit, and the stop loss we'll have at 80 in steps of 20 to 120. Now we just need to make sure that nothing else is ticked for optimization, and that all looks in order. And what I want to do now is to take this, let's take the year 2013, January 1, and let's optimize it over a year to December 31. And then we can, once we've optimized them on that 1 year period, we can then test it beyond that period and even prior to the period and see how that optimized settings work over that longer time frame. So let's hit optimization and let's start. And so now we'll see the results coming up in here in a little while. It shouldn't probably take about 5 to 10 minutes to do our run, unless I've left something ticked that I shouldn't have. But let's see how we go. While we're watching that, I just want to see the start of it to make sure we've got the settings right. This is taking okay, 1 out of 12, which should be right. And we're starting off now, at least with a profit of 80 and a stop loss of 80 before. So we're down $1,500 in that period and 21% drawdown. So let's leave that running. And while that's going, I wanted to share with you another article that I think is really useful for us as traders. It's an introduction to automated trading. Perhaps I should show you the website first. And so this is a website called Mechanical Forex. He's a very clever person, very versed in mathematics and a coder and EA builder as well. But he's shared some really nice stuff for us about what's involved in creating strategies with expert advisors. And on this side, you can click and load down his ebook. And so I would highly recommend that if you're into trading with expert advisors, that you take down this site, mechanicalforex.com 2010. You can take a screenshot and that should give it to you. Otherwise, if you can't get hold of it, send me an email and I'll send you the link. But that's really well worthwhile. And then the PDF that you can download is this one here. And if you just look at the contents, things you should know about automated trading. I mean, some very good basic home truths there. I think if you've done a bit of it, it's good reading, I'd say, from section 5 on, because we all have to deal with the psychology of seeing drawdowns. Bit of a section understanding indicators, and then section 7, where I am now, the trading system design and what the keys to successful logic are. He makes the point in this, as I've discovered too, that getting an entry point is fairly easy, and there's lots of ways of getting into a trade, but that doesn't determine our profitability. What really governs our profitability is how we manage that trade, and that relates both to money management in terms of stop loss take profits and trading stops, lot sizing, whether it's percentage risk or a fixed lot size, and as he points out, a lot of analysis in order to find a strategy that's robust. Now, this guy actually thinks that 5 years an absolute minimum. He would prefer 10 years of data. And I don't think you can do that because I don't think there's tick data available for 10 years as yet. I think 2007 was about the first time we had some really good data. But so certainly a 5-year data span is what he's looking for. And the other point that he makes in this particular document is that what should be our expectations? And he brings out some data about, as recorded in Barclays Currency Traders Index, section 3 here, that professional Forex traders are happy when they're making about 10% per annum and about a 15% drawdown. And what he goes on to say is that really, as from his own experience, and I share it, If you can get 1 to 2% per month out of an EA, then you're doing really well. We all know that there are lots of EAs for sale that claim 50, 20, 30, 100% profit per month. And you can do that for short periods, and people can even do their verified trading results, but they've probably done about 10 different, they've probably got 10 different strategies running, and they'll show you the one that has actually worked for the particular period that we're looking at. So 1 to 2% per month is really what we're aiming for, and somewhere around 15%, 10 to 50% drawdown would be the ideal. Now, coming back, we're finished 7 runs, and as you can see, all of these runs are still negative for that year. We're doing about 280 trades. We've gone from initial take profit 80 to a stop loss of 80 to an initial profit of 120 and a stop loss of 100, but they're all consistently negative, and I don't think there's too much point in going on. We'll have another 3 minutes to go. So there's still something that's not working with this one, and one of the things, so I'm going to stop this now. One of the things I found, surprisingly, was that, cut a longer story short, I'll make that 140 and 80 is something that I found to work pretty well, doing what I've just been showing you. But where we got unstuck, surprisingly, is the trailing stop. Now, it is a dynamic trailing stop in that it's based on moving average. But let's have a look. If I take the trailing stop, which is my moving average of 1 crossing the moving average of 10 at the median price with a crossover of 10. If I set that exit to false, now that I untick my take profit, I did, so I've got nothing there more. So let's have a look at it now. We'll just do the 1 year. We're not optimizing, we're just doing one straight run. So we can now look at graphs and see how we go. Okay, so far a little bit of profit. So what we've done in this particular set, we said we're not going to use that indicator anymore. And we're going to rely on our take profit and our stop loss setting for that. Looking at this part of the chart, you would think that's not a smart move, but remember, we're looking at 3 years worth of data. It's painful going through it visually. You can do it, but it's a real chore, and that's why I developed the Order Trader, and why I think it is a great tool in order for you to do these sorts of, for all of us to do these sorts of tests to see how we can make a strategy profitable. And so far, let's look at the report. So before, remember, we were about $2,000 in loss. What was the optimization results? We were about $1,200 to $1,700 in loss. Whereas by removing the trailing stop, we're actually finally in profit, at least for that year, by $160. It's still not good enough at 1.03, but our drawdown now is down to 15%, and the short positions one is still only about 35%, but at least we're in the black. The other thing that we can do is, I think we've all heard of it, we're trading on the 1 hour time frame, which is still a relatively short time frame. A lot of professional traders would trade on the 4 hour or the daily, and in fact, I forget the guy's name now that I was talking about. Let me get his name rather than talk about that person. Daniel, that's right. Daniel suggests that 1 hour should be the minimum time span we use for any automated strategy. So I've got quite a few at 15 minutes, but I'm starting to move to the 1 hour, and certainly the 4 hour has also been one of my favorites. So Okay, what we've done so far is we've taken away the trailing stop. And the other thing I was saying, because we're trading on the 1 hour, it's sometimes useful to trade only in the direction of the longer term trend. And a common basis of doing that is to use a 200 period moving average. Now in the Order Trader, I have lots of modules of MAs that I can use. So I'm going to use another module that I have, which is my time frame 2. I'm going to set that entry to true. It's on the 60-minute time frame still. And after some back testing, I found that if I set that to a 5-period simple moving average, and I set my other SMA to 200. So in other words, we're saying that when the 5 SMA is above the 200 SMA, we only go for longs, and if it's below, then we only go for shorts or sells. So we've now added that, and we can now test for that. And I've not changed anything else. So let's start that. And let's not look at the graph. So what I've done is to, and I always advise people to look at visually at what you're doing. So we've made that a 200 simple moving average, and if I've applied it to the close, and I normally make my long ones a blue. So that's our 200 period, and then we've said we'll add another moving average, which is the 5-period simple close, and I'll apply a yellow. Now that gets caught up in here, but so what we're saying in this position here, when, and it doesn't quite work as you can see here, we would not enter a buy until the yellow is above the blue as well. So instead of getting in here, we're now getting in up there, which obviously is going to end up in a losing trade. But you'll find there are other times when this works well, because for instance, in this case, if we weren't using our 5 and 200, we would have got into a buy trade at this point here, and we probably would have ended up losing. So let's see what happened on the graph with 635. So 580 with a profit factor of now 1.16. The drawdown 16%, and we've got about 36 to 45% positions won. So we have improved the positions won by having this as a having a longer term moving average acting as a guide to making sure that we only trade in the direction of the longer term trend. I could also put that particular moving average crossover on a higher time frame, and I'll just want to show you how we do that. So I come back to my entry true here. I've set that to 60. If I set that to a 4 hour, that's at 240 minutes. And if we did that, and let's see what sort of result we get then. So this case now, it's no point having, obviously we need to change our chart as well, but you can't see both charts. I mean, I can click here, but then these MAs aren't representative. So let's just see how we go. It shouldn't take too long. So obviously a lot less trades, because when we're in that higher time frame, it will reduce the number of trades. But in the end, what we want is results, is winnings. And so we've now made 1200. We're almost up to 2 in our profit factor. a drawdown's only 8% and we're about 50% profitable. So maybe that's what we can go with. We've reduced our trades to 17 in 1 year, so we're only getting 1 trade a month, and that's the drawdown, if you like, the negative part of it. But as I said, I wanted this to be an exercise in looking at how we go about testing and the features of the Auto Trader. So let's take this setting and now let's do a walk forward. So we've optimized it in the year 2013. Let's now go to 2014, January 1, and then take it to the end of that year. And so now we're going to forward run it on, our optimized strategy is going to go forward on a period that we haven't tested this. And so let's see how we go with the settings that we've found to be profitable in 2013. So this is a little bit slow, but I think it's useful to have a look at it and see whether we can repeat the performance that we achieved in the previous year, because ultimately what we want is something robust. I mean, if we only make 1% a month, but we can be assured that it gives us 1% per month year after year, then we can happily trade on automatic. But if we have something that makes us 10% a month in 1 year and then loses 80% of its value the next year, then we're always on edge, wondering whether we should stop, how big a drawdown should we let it go to, etc. So in this case, we've made about the same, $988. We're still profitable at a profit factor of 2.2. We've only done 13 trades, so just again 1 trade a month, but 71% positions won. So maybe that's okay. So let's run it for the full year that we've got data for, which is January 1 to and I've got it till June 30th, and let's go. And we'll see what we can come up with. While that's going on, I wanted to show you a couple of other things that I've been doing, and that is to use the strategy quant analyzer. So after I've done a test and have a report, I save the report, then I'll open it with Quant Analyzer. This is something we've shown in previous webinars. And so here is one version where I've optimized it, the strategy that we're doing, somewhat different to what we've done, what I've just done now. But so you can see over the 4 years, we had a great year in 2012, but then progressively the strategy has been, so I'm in the left corner here, been progressively giving us worse results. Would appear that Monday has not been a good day, and March, April are bad, and August is bad. That could be summer holidays, who knows. So that was one that we're doing, and if you look at the equity chart, it's a bit rough, but at least there's a general trend up. And the overview is that it made almost $9,000 profit in 3.5 years, expectancy of 16, but you can see the various months when it was negative, and certainly April seems to be negative every year, and August, I guess, was negative 2 years, but we're starting to pull back. So that's quite useful. That's trading, as I recall, trades there. The second one that I did was where we didn't restrict the hours of the day that we were trading. And so here you can see that I've got trades over the full 24 hours of the day. I'm in this bar chart. But what I preferred about this was that it seems the conditions for this particular strategy seem to be improving rather than decreasing, as we saw on the last one. And so it's not too bad. Again, we've got those March, April month, and August still negative. I did try to remove not trading on Monday, but somehow I can't replicate the quant analysis of that. So I'm leaving it as is. The overview was that it was 7,000, so less profitable than the other one. But if I had to choose between the two, I'd probably go for this one. But I'm now in this part here where my cursor is. April, certainly I would have my EA turned off, given the results I get here. Okay, I've heard the bip for something that's happened, and so we have done the full year, full 3.5 years. We finished with $2,000 in profit, profit factor 1.4, 15% drawdown, and about 30, yeah, so about 40% on average of positions were winners. So again, that's pretty low. $2,000, that's 20% over 3.5 years is it's not going to make you rich, but nor is it going to break your bank. At least we went as low as 15, about 15%, but for a long period we have been in a winning streak, and the number of trades is 56. So again, we've only just done over one trade per month. One thing that I did do with the chart that I showed was to add some scale-ins. A scale-in is what you can do with the Auto Trader. So once you're in a trade that's in positive, we can ask the Auto Trader to add some extra trades. And what I found in my testing was if I add an extra trade at 5 pips in profit and at 15 pips in profit, and I take profit at, from memory, it was 120 and 80. So a little bit less in profit than for our main trades because we're starting later in the trend. And it's a funny thing with my Auto Trader that I can, depending the scaling orders, if they're pending orders, and if the main trade closes before these have been triggered, before the scale-ins have been triggered, then I have a choice of either leaving those scale-ins sitting there or taking them out. And surprisingly, I found that if I leave them sitting there, they seem to get picked up and give us better results. So I'm willing to give that a go. But let's now see how we go on these settings. And I'll click OK, and we'll run it for the full period. And then while that is running, we're getting close to the end of our session. What I mentioned is that for last week and this week, if you buy the Auto Trader, which is what I've been demonstrating, from the Forex link, which is click2go.me/FX Auto Trader Elite. If you buy the Auto Trader from this link, then when I see that has come through, I will send you a copy of my Trade Manager, which, as the name implies, is a EA that can manage trades that you've opened yourself manually. Or you can also use this trade manager in conjunction with the Auto Trader, because at the moment this trade manager gives you things like being able to set your take profit based on the average true, a multiple of the average true range, same with your stop loss and with your trading stop. So it enhances the flexibility that you have. It does mean, of course, when you can't do 2 EAs on the strategy tester, so you could only do this on your forward demo testing. But it's a very nice tool to have, and I normally sell it for $79. But as part of this webinar promotion, you can have this free when you buy the Auto Trader. Let's just see how we're going on our test and our graph. And again, we had the drawdown, and we had quite a strong drawdown. We went down to 6,000. So at the moment, this doesn't look too good to me, having the extra scale-in trades under these particular settings. I did find in the other settings that I showed you on my Quant EA, where in this case, instead of having my MA crossover of 5 over 200 on the 4 hour, I had it on the 1 hour. And in that case, the scale-ins did actually enhance the profitability of this particular strategy. So we're coming up to the end. But again, I'm making the point that we optimized this strategy just on 1 year of data, the data for 2013. What appears to have happened is that doesn't work so well in 2012, which would be these first trades that we see here. But going forward, it looks like it does bear some fruit. So we've made almost $5,000, almost 50% in 3.5 years, in 40 months. So we've achieved our 1% a month profitability, which is what we should be aiming for. It's a 1.4, but unfortunately our drawdown is quite high at 41%. So we'd like to see that lower so that we can sleep better overnight. So I would say then that probably we wouldn't do the scale-ins on this particular strategy. Now, obviously, there are other things, as I said, that we can do. We can try adding trailing stops or break-evens, etc. And the other one that I was showing you before in RSI, I have also found that if I change that to 65 and this to 35, I'm now in my RSI entry settings. So 55 and 45 are the upper and lower limits for buys and sells. But at the moment, what we're saying when we set it like this is that RSI has to be between 55 and 65 for the buy entry to be taken, and between 45 and 35 for the sell entry. And that should give us better results. And maybe we'll do one quick more run. If we take out scale-ins, and then see how we go. And so while that's happening, this is the special offer. This is the last week, so until next Saturday it'll be available. So don't delay. And finally, I want to just draw attention to my Facebook page, facebook.com DIY Forex Skills. I also, apart from order trading, I also do some manual trading, and I encourage everyone to do the same, because that way you focus on the charts and you learn things, you see things, and it's well worth the effort. And I think we become better traders when we do that. So this is my Facebook page. I have very slow internet at the moment in Sydney. We are hoping to get proper broadband soon, but at the moment and we suffer in silence. And so, for instance, at the moment I'm looking at trading the US Canadian dollar because it moved above a strong resistance or support line, which is evident on the monthly chart at $1.30. And so I'm using my channel. I'm here waiting for a pullback to get into the trade to go for a buy. Reasoning is that waiting for the pullback because we have a divergence, price moving up and RSI moving down. So we're waiting for that, and then I've got an entry, a buy limit order waiting here in case it does go down. And if it doesn't go down, it keeps revving up. I've got a buy stop order in place at this position here. I did something similar for the Aussie, going down from below 80 cents, and that has worked. Oops. That worked really nicely. For me, so I traded it all the way down here. Again, using just the basic logic, a channel, sometimes the Bollinger Bands, and the RSI. So you might find that of interest. Now I've heard my little chirp, so let's see what's happened. And with those settings, then we're almost $2,000 in profit, 54 trades in 40 months. The drawdown's only 13%, and we've got about 55, 30, so average 40%. So we can make some money with this strategy with a few modifications. It's not great, but being able to make 20, so let's say 2,000, let's say 20% over 40 months is borderline. I mean, that's 0.5% a month, so you'd have to query as to whether you would do it. But with that drawdown, if it's one trade, if it's one strategy you're doing, at least you're not wiping your account dry, which is what a lot of other things will do for you. So that sums it up. As I've said, this was a strategy that we took from the web. Russ does it on a manual basis, so we obviously can't do exactly what a human can do if we automate it. Of course, if you're manually trading it, you can't trade 24 hours a day, whereas with the EA, you can do so. Now, next week, we'll have a look at another strategy. Let's get back to here. And if you have something that you would like to see tested, then please email me, and that should be at info@diyforexskills.com, and then I can have a look at that over the week and see if we can make something of that on our webinars. So until next week, thank you for watching and all the best, and do give me some feedback and let me know how you're finding this series. Until next time, all the best. Andrew Peters signing off. Bye-bye.